Hershey company is currently trading at $198 per share, and over the past year, they're down around 8.5%, but that doesn't tell the whole story behind the price movement of this company. If we zoom out just a little bit more, we can see as recent as May 10th of 2023, the company was trading at $274 per share. So the company's share price has dropped drastically from that all-time high, as we can see again, currently trading at around $198 per share. Now, historically speaking, this company has had really good dividend metrics. In fact, if we jump over to my dividend breakdown sheet, come up here and plug in HSY and hit enter, we can see all this data will automatically load in. Now, the first thing we'll point out, starting dividend yield right now sitting at about 2.77%. So that's a decent starting dividend yield, but it looks a lot better when you also take into account the dividend growth the company's seen over the past decade. We're looking at double-digit dividend growth over the past 10 years and 5 years. So great job of increasing those dividend payments. And for reference, we can see those dividend payments have grown from around $1.81 in 2013 to in 2023, $4.46, and the most recent dividend hike was a large one, putting them at $5.48. So they're really focused on growing those dividend payments. And this is actually something they talk about on their investors presentation. If we look at the key capital allocation priorities, we can see the number one priority, like most businesses, is business reinvestment. And that's something I want to see out of all my companies. I want them to continue to reinvest. But their second highest priority is going to be that dividend payment. And again, we can see that is pretty evident with the focus on growing those dividend payments over the past decade. Now we can see this dividend growth has been sustainable because the cash flow payout ratio has remained in a healthy range. We can see 2023 free cash flow payout ratio sitting at about 57.28%. So that means 57% of the company's free cash flow is being used to pay out dividends. So on the reverse side of that, 43% is still available to do things like reinvest back into the business or buy back shares or pay down debt or even attempt mergers and acquisitions. So to put this into perspective, again, dividends are paid out of free cash flow. We can see this blue bar is the free cash flow generated and red bar is dividends being paid out. And over the past decade, it's clear free cash flow is growing, allowing them to pay out more in dividends every single year. Now, Hershey did recently report their latest quarter's earnings earlier this month, and we can quickly see at a glance they actually missed on the bottom and top line. So you would think there would be a huge sell-off, and looking forward, we can see their next announcement date is October 25th, and it looks like the revisions we're seeing from analysts kind of go both ways. We have 8 analysts increasing their earnings per share revision with 8 decreasing it. But despite all of this, we can see if we look at where they were on August 1st, the date they released their latest quarter's earnings, there really hasn't been much change in the share price. In fact, they're pretty much exactly the same. Now, over the past month, they actually are still up around 4.10%. So we need to dig into the background of this company and figure out what's going on just a little bit more and look at some of the underlying fundamentals because it's really going to paint a picture of exactly what's going on with Hershey's. Now, one of the things we have to understand about Hershey is they are very reliant on the commodity market, and specifically when it comes to cocoa prices. And this is something I've talked about with Hershey's before. If we look at how the prices of cocoa have changed over the past year, it has increased dramatically. Look at this. It's more than doubled over the past year, which is pretty significant. And if we look at the past 5 years, it really starts to put things into perspective. The prices of cocoa have absolutely skyrocketed. And JP Morgan actually a few months ago put out a report on exactly what's going on. We can see this is as of April 3rd, 2024. So this report was put out around 4 months ago. And basically what this report told us is cocoa prices are rising due to global supply shortage, chronic underinvestment in cocoa farms, and investor speculation. And the general consensus of this report was that cocoa prices will come down slightly over the medium term, expecting it to be around the $6,000 mark. So if we go back over to our chart, we can see again, this was put out in April, so around right in this area right here. Now since then, it dropped down to around 8,000, but has started jumping back up and is now at about 9,474. So we haven't seen it come anywhere close to that $6,000 mark yet. Now again, to be fair, this report has only been out around 4 months. Now we can see before this huge jump up, cocoa prices were pretty steady at around 2,500 to 2,700 for quite some time. So even it coming down to 6,000, it's still around 2 or 3 times higher than it was previously over the past few years. So what exactly does this mean for Hershey's? How has this changed the underlying fundamentals? Well, if we jump over to my stock screener and profitability sheet, let's come up here and plug in HSY. We can see all this data will load in. And quickly, like always, if you'd like to be able to download any of my completely automated spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. We actually just released a huge update allowing you to automatically import quarterly data straight into your spreadsheet. So right now you can get a 7-day free trial, so there's no risk to seeing if you like it. So now if we come down here and click on the profitability and income sheet, one of the things we can see is over the past decade, the gross profit ratio for Hershey's has remained pretty steady. This is a good sign and it's something we like to see. And overall, it's a pretty healthy gross profit ratio. We can see the 10-year average is sitting right at about 45%. And in 2023, it was actually slightly higher, sitting at about 45.24%. But one of the things I want to know is how are these high cocoa prices currently affecting Hershey's? And because they just released their latest quarter's earnings and because ticker data has the ability to pull in quarterly data, this is something we can actually analyze pretty easily. So like I mentioned, 2023 gross profit ratio was around 45.24%, but again, cocoa prices have been skyrocketing. So how has that impacted the company? Well, using the ticker data function, we can easily find out. First off, we want to plug in the company's stock ticker, and then we want the gross profit ratio. So we type that in here. We want the data for 2024, and then of course we want the most recent quarter's data, which would be Q2. So again, ticker data Hershey's gross profit ratio 2024 Q2 and hit enter. And what we can see is actually something pretty interesting. Gross profit ratio is actually down quite a bit, sitting at about 42.43% for Q2 in 2024, when again, 2023 and the 10-year average is closer to around 45%. So we definitely saw a drop in the gross profit ratio. So this is definitely a concern for investors. Again, gross profit ratio over the past decade has remained pretty steady with the 10-year average sitting at about 45%. So the jump up in cocoa prices is definitely playing a large role in those gross profit margins. So that's definitely one of the key points to be concerned about when it comes to Hershey's, but there's still a lot to like about this company, and they actually point out a few in the most recent investors presentation. And in fact, if we jump over to the 18th slide, one of the things we already know about Hershey's is they have a phenomenal portfolio of brands. And one of the more recent focuses for the company is creating more salty snacks. And something they're proud of is they now have 2 salty snacks entering their top 10 brands. And we can see those brands. We have a popcorn brand and then a pretzels brand, and combined, they did over $860 million in retail sales. If we scroll down and look at that 19th slide, we can see they are now considering that their salty snack segment is a scaled and integrated unit. We can see a few of their brands right here. And they're actually getting some pretty good growth out of these salty segment brands. For example, look at popcorn. 5-year compounded annual growth rate of around 8.3%. And the same is true with pretzels. They're seeing around 9.5% growth. So that's pretty solid, especially when we compare it to total snacking, sitting at about 7.4%, and then edibles about 6.6%. And if we look over here, we can see the 5-year retail sales CAGR for popcorn sitting at about 12.5%, and for pretzels, 65.4%. So again, a lot of growth in this segment for the company, which is something they've been focused on. Now, if we jump back over to our stock screener sheet, one of the things we'll see is revenue per share hasn't really grown at a very high rate. Yes, it is growing, and for some perspective, if we jump over back to the profitability sheet, we can see the 10-year revenue CAGR from 2013 to 2023 sitting at about 4.56%. So it's not necessarily very high, but yes, still growing. 5-year looks a bit better at 7.46%. Now, the earnings growth has actually been quite a bit better. For example, look at where they were in 2015, sitting at about $2.40, and in 2023, all the way up to $9.09. So earnings have grown at a much higher rate than revenue, and the same is true with free cash flow. They are buying back some shares. Debt to assets appears to be in a healthy ratio, but one thing I really like is return on invested capital actually looks really solid for this company. In 2023, it was sitting at 24.28%. And again, ROIC, this is telling us how profitable the projects the company is investing to are. And typically, I want to see this above 10%, and higher quality companies tend to have this closer to around 20%, which Hershey's has actually been pretty close to for the past decade. So that's a good sign. So with all this being said about Hershey's, again, over the past year, they're still down around 8.84%, and they're down significantly from their all-time highs in May of 2023. So is the company a company we should consider adding to our portfolio? This isn't a company I currently own in my personal portfolio, but should I consider it? And to answer that, let's go ahead and jump over to our stock valuation spreadsheet, and we'll come up here and plug in HSY. And all this data will automatically load in. Now, one of the things I want to quickly point out on our stock screener page is look at the beta. It's sitting at just 0.35. So technically, you should see very, very little volatility from this company. If you're a long-term investor, volatility shouldn't really bother you anyway, but for people closer to retirement age, this is actually pretty important, so it is something to take note of. Now, the first valuation we're going to take a look at is going to be Graham's valuation. And basically what we're doing is we're valuing the stock based on the projected earnings per share growth while also taking into account current market conditions by looking at the current yield on AAA corporate bonds. So the first thing we need is our estimated earnings per share average, and again, with the ticker data function, we can actually automatically pull that in for 2024. So we're plugging in 9.52. That's the average analyst expectation. Now we're also plugging in our growth rate projection and plugging in the current yield on AAA corporate bonds, which will drive down this valuation because it's a bit higher than it has been historically over the past 5 or 6 years. So we come to an intrinsic value of about $147.43. Now our next valuation is going to be our discounted cash flow analysis, and this values a stock based on how much future free cash flow they are projected to produce. So you can see in the scenario, we're looking at the historical free cash flow growth, and we're expecting it to be a little bit slower than it has been over the past decade. We're projecting a free cash flow growth rate of around 8.5% to those future free cash flows. We then find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, and subtract out the total debt to get equity value, divide by shares outstanding, and we come to a DCF price per share of $184.18. The next valuation we look at is our multiples valuation. Now, this one's a little bit unique, and I'll show you why here in just a moment. But basically what we do is we look at how the market is valuing these companies that are similar in structure by looking at the price to earnings, and the average price to earnings for these comparable companies is sitting at about 17.84. So if we apply that same price to earnings to Hershey's, we'd actually come to an intrinsic value of about $162.23. Now, what we have to consider is Hershey's typically trades at a premium compared to these comparable companies, and let me show you what I mean by that. If we jump over to Seeking Alpha, go over to valuation, we can see price to earnings non-GAAP for the trailing 12 months for this company is sitting at 22.01, but their 5-year average is around 25.21. So historically speaking, they just trade at a higher valuation than these comparable companies, and maybe that's because of their dividend metrics or the strong brand or just the great history the company has. But regardless, again, they typically trade at a premium. So right now, they're down by about 13% compared to their 5-year average, and this is true for the other price to earnings ratios. We can see price to earnings non-GAAP forward-looking, it's true. Price to earnings GAAP and forward-looking GAAP, it's true. Basically, the valuation is quite a bit lower than it has been historically speaking. So yes, we are looking at this multiples valuation, but that's something to strongly consider. Typically, they trade at a premium compared to these companies. And then the last valuation we're going to look at is going to be our dividend discount model. And this values a company based on how much they pay out in dividends and how much that dividend is growing over time. So just assuming a dividend growth rate of around 6% and a discount rate of 8%, we come to a dividend discount model price per share that is radically higher than the current share price, sitting at $290. Again, this goes back to those great dividend metrics that we're seeing, 10-year dividend CAGR of around 10%, and it looks like that is sustainable. And when you look at that most recent dividend increase, again, I think they're going to continue to hike those dividends at a pretty high rate as long as they can. So when we jump over to the output tab and average all 4 of these valuations together, we come to an intrinsic value of $196.07, which is actually right at the current share price for this company, but with a 10% margin of safety, acceptable buy price of around $176.46. And for reference, if we jump back over to Seeking Alpha, we can see there have been some times over the past year when they've gotten in the low 180s, but they haven't quite reached that 10% margin of safety. Now, to be fair, again, we have to remember that in the multiples valuation, this is probably a little understated because historically speaking, they trade at a bit of a premium compared to those comparable companies. So that is something to consider. That's one of the reasons it's so important to remember that valuation isn't art, it's definitely not a science. No company is the same. So moving forward, it will definitely be interesting to see what happens with those cocoa prices. Will they come down any more, or will they continue to remain high? And if so, the gross profit ratio for Hershey's will continue to probably be a little bit lower, which would be a concern for the company. But regardless of this, I expect the dividend growth from this company to continue to be pretty solid. But go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. Like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Again, we just had a huge update allowing quarterly data, and you can automatically get a 7-day free trial at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.